Mike Pratt was appointed as the Secretary of the New South Wales Treasury in August 2017. So this is fourth budget in that role. And the fifth for our Treasurer, the Honourable Dominic Perrottet. Prior to his role with Treasury, Mike was the New South Wales Customer Service Commissioner, played a key role in the establishment of Service New South Wales. And with the pandemic, I think we all appreciate how thankful we are for that. Mike also has a long-standing history in banking with senior roles at Standard Chartered, Westpac and National Australia Bank. Once the Secretary has finished his address, we will have the opportunity to ask questions for 10 or 12 minutes. We won't have the roving microphones today, so if on the way through you can think to put your questions forward in the app as outlined, the Pigeonhole app, which I think the password and link will be back on the screen at some point. But for now, if you could please join me in welcoming to the lectern the New South Wales Treasury Secretary, Mr. Mike Pratt.
Thank you very much, David, and good afternoon, everyone. Apologies again from the Treasurer. It's been a rather interesting day, as you all know, with goings-on with COVID again, but it is good to be here, and thank you for coming. I get quite excited about budgets. Some of you in the room might think that's quite sad, but this is the fourth one that I've done, as David mentioned. Everyone has been different, and certainly over the past 12 months, this time last year we delayed the June budget because of COVID. We actually did that in November. We did a half-year update in February, and now we're on our third budget in 8 months here in June. So it's been an interesting time with budgets, but they are great fun, certainly when you complete it and you go out with it. But if you want to get excited about it, I just remind you that at 4 o'clock today there is no singing or dancing from the Premier. So if you're going to get excited, you're quite welcome to do that during the presentation, all right? So that's a little bit of history. I might just first of all go back to last year's budget in 2021 in November, and that was a budget really of what I would call response and recovery. They were the main themes of last year's budget. This year's budget, we've done more on recovery, but the other key theme in terms of the R theme is reform. So response and recovery has gone now to recovery and reform. And that's what I'll focus on today. But importantly, as you would have seen in the budget papers yesterday, Treasurer's put a huge focus on families and communities. And that's something he feels very passionate about, and that's come through in this budget very strongly. So recovery and reform, but a really strong focus on families and communities. Firstly, just to also acknowledge the Gadigal people of the Eora Nation. This artwork was commissioned by Treasury as part of our reconciliation plan, and Josie Rose was the Indigenous artist who did it. But certainly to recognise their culture, acknowledge that, their history, and of course acknowledge their elders, past, present and emerging. So what has the papers had to say about the budget? I could have changed that heading this morning, but I can say more broadly we are shaking off the effects of COVID. But overall the budget rightly has been accepted well. There is quite a good mix, as I've indicated, around families and support for communities, but importantly reform. And one of the key reforms that we've announced, as you would have heard, is electric vehicle reform, and I'll talk a little bit more about that shortly. So look, what I wanted to cover in the next 30 minutes or so is quite a lot of information to download to you, but I'll go through it reasonably quickly given time, and then I think we've got Q&A after that, so very happy to take some questions. So firstly, let me give you an overview. Last year, I remember lots of discussions with my economics team about will we see a U recovery or will we bump along the bottom for a period? Will it be a V or will it be a W, for example? What this shows clearly is this is the strongest V recovery we have seen. So if you look at this chart, you've got the early 90s with the recession we had to have in the green. You've got post-Olympics, the dot-com bubble in the orange, and you've got the GFC in the green, in the blue. And of course, you've got COVID in the mauve. And you can see there on a quarter-by-quarter basis here what an incredible recovery this has been. And I'll give you some background to that. But the great thing I can say to you today is that we are much more positive about the New South Wales economy than what we would have been back in November. And we're seeing the effects of that in business and consumer confidence. We're seeing the effects in that, importantly, where I sit in revenue. And that's really important as we get the economy repositioned. Now, important point to make is that we were ready for the challenges of today. And I keep saying, last pre-COVID, when we were doing budgets, that we should look to keep a surplus of around $1 billion for a rainy day. Not knowing, of course, we'd need $16 billion for a very large rainy day in COVID. But the intent was to have a well-positioned operating statement and have a strong balance sheet. And so we came into this crisis with both those in place. And as you can see there across those charts, the state of the economy in GSP, in the middle unemployment, and then on the far right, the budget surplus position. I might add that $6 billion surplus bar in the middle was just delivered before I took over this role. It's all been downhill since. And a record deficit that I delivered with the Treasurer last year. So not a track record that you'd really want to boast about, but the point of this is that we came into this strong. And I'll talk more about the digital journey later. We were just discussing it at the table. But the digital journey also is not something we brought up when we got into COVID. We've been on that journey for 8 or 9 years in government. So when COVID hit us, the ability to flip that capability really quickly has been hugely powerful. And I'll give you some stats on that as well now. So it's positioned us for the response. So if you look across the number of points that I'm making here, the health response, we've spent over $4 billion in COVID-related health response since February last year. And if you go back to that time, I remember sitting around our crisis committee with Premier Treasurer and the Health Minister and the 3 secretaries. We really didn't know what we didn't know. But what we did know is we needed a lot of procurement. We needed a lot of PPE, ventilators and masks and gowns and gloves and so on. In the space of 4 months, we spent $1 billion on PPE. And if you can think about what we needed to do that in terms of capability, because this was acquired around the world. And David and T-Corp played a key role because we had them running AUSTRAC type capability to make sure that we weren't getting ourselves into strife with money coming from offshore points in terms of payments. So huge effort early in the COVID environment. And then on Service New South Wales, you can see there 5.3 million customers in state now using the Service New South Wales app. I'm told that's second only to Facebook in the state. And if anything, of course, COVID has enhanced that as well. But how important has that been? You can see 304 million COVID check-ins. I believe, our neighbours down south only in May of this year ended up with one COVID app. And if you'd been down there during COVID, which I was, having to check in multiple times, repeat your information, incredibly frustrating. So that's been very, very powerful for us through this period. Testing and tracing on the back of that, we have an outstanding health team. Huge task by them to test and trace, and of course they're hard at it right now. But given the capability to track through COVID app and the rigour that they put into that has been incredibly powerful. And then on the bottom left, our quarantine program, we've been bringing back 3,000 people, 3,000 Australians from around mid last year every week. And this is what you don't see, but every week in Sydney, there are over 5,000 people in hotel accommodation. And it's very irregular that we've had a breakout through that. So it just gives you a sense of both health and police who've equally been managing that. What a great job they've done to keep us safe. And you can see from this pie chart, we are bringing back the bulk of Australians. We have a few payments outstanding from a couple of our peer states, so I won't go into that. That's more into the politic, but I'm about to offer them a payment repayment plan if they're having trouble with their budget. So, look, I give credit to the government. We are the state that's taken a national view, and we have been open for business. And you can see that in the numbers. So full credit to Premier and Treasurer and Cabinet. So not only in the keep healthy space, but then in terms of business, the whole strategy that has underpinned this period of COVID is keep people healthy and keep the state open for business. Those two have gone hand in hand. Now, obviously at the beginning, the focus was very much on health. You know, let's make sure we understand as best we can the issues and shore up for that. As we've got through the year, the focus rightly has turned more onto the economy. And every meeting that we have, Crisis Committee used to meet 4 and 5 mornings a week. It now meets once a fortnight. But every meeting we have our Chief Health Officer in Kerry Chant and our Chief Economist in Stephen Walters, who's down here today. And so they equally have airtime to talk about the latest health concerns and to talk about the latest economic concerns. And so that balance has been fundamental through this period. One of the things I might just mention that's been brilliant for business and continues, we've just extended it to the end of July, is the Dine and Discover voucher. And if you haven't downloaded yours yet or used it, I'd encourage you to do so. Just a few stats on that. We've issued 17.9 million vouchers. 9.1 vouchers have been redeemed, and the total customer spend is $364 million, an average of $40. That's what we wanted. So the vouchers being used, and then citizens are spending more over and above that to stimulate the economy. This has been a lifeline for many retail people in the tourist and that industry. So getting the business part of this addressed as well has been critical. Now, if I go into just a quick update on some of the key economic stats, you'll see here state final demand on the left. Again, the V recovery that I've been talking about. And importantly, on jobs, we lost around 370,000 jobs through COVID. 270,000. In the latest jobs numbers last month, we're now 36,000 above that number. So in other words, we recovered over and above the number of jobs that we lost pre-COVID already. Now, if you look at past recessions, that's unheard of. Most economists would say it's usually 4 or 5 years before you recover the jobs that you've lost. We've not only recovered, but we've increased that number in this period. Confidence has really rebounded, and this is consumer sentiment here. It's an 11-year high in consumer confidence already, and importantly, from my perspective, people are now spending on the back of that. Through COVID, we saw a lot of money into banks. Bank balances build up significantly. People are now back spending, and a lot of that, of course, has been online. Huge trends now to digital and online purchases, but consumer confidence back and spending back. Equally, on business, on business sentiment, we are now at a record business confidence point. We have not seen business confidence on record this high ever. So business has really returned. Business investment is coming back, as you can see there. The however, though, is two things that I'm getting a lot of feedback on business. And one is they want certainty around COVID as best government can give it. And this particularly goes to borders. So this goes with Commonwealth and other state governments. So when will borders be reopened? And then when will borders interstate be reopened, and how do we manage that so they have signalling? So today is a pretty good example how tough it will be for business in the next week. And it's a real challenge when you have environments like today. How do you best give business notice and give them information as you can on how to manage in these environments? So certainly around borders and closures is important. The second big issue that's emerging, though, in all my discussions with the commercial sector is shortage of skills and labour is a huge issue. And you might be interested to know, if you're looking for another career, there are 2,200 barista jobs vacant around Greater Sydney today. So if you want to be a barista, there's a chance to look at that. But that's a simple example of huge labour shortages, and it's right across the spectrum of skills. And that's something that we're not going to fix quickly, but that is a real challenge for us. Living standards improving. You can see here GSP per capita, and then the economy now. We are thinking we're back at 5%, which is quite amazing in last month's numbers. We're now looking at getting to 4.5%, certainly by the end of the forwards by 24-25. That's back where we came from pre-COVID. So some really healthy signs. I won't bore you with all these numbers, but just a few that I've red circled there. If you look at GSP, gross state product, you can see there negative in 1920. We forecast negative in 2021. It looks like we're going to end up with about 75 basis points, but then strong rebound in 21-22 at 3.25. And then you'll see unemployment that I've mentioned. And then down the bottom, one of the big challenges in the budget is population. So we will actually be under about 411,000 people in New South Wales relative to our prior forecasts due to the border restrictions in place. So you can appreciate that does have a key impact on economic settings. So what does all that mean for the fiscal position? Well, importantly, if you look at revenue, since November budget, in the space of 7 months, we're up $23 billion in our forecast. Spending being a big factor here with GST, you can see up $9.4 billion. Transfer duty, we haven't seen the stock come back in numbers yet, but prices certainly have. And so this drug that the government's on called stamp duty, we're doing our best to remove that. But at the moment, it's helping the Treasury coffers in terms of revenue growth. And you can see payroll tax and motor vehicle taxes and so on. But overall, strong revenue growth. What do we do with that money? I'm not going to take you through both of these pie charts in detail, but if you look at revenue, I guess the key point to take away is around 40% of our revenue is driven by the Commonwealth. So these issues that only Treasury secretaries debate around horizontal fiscal equalisation, you might have heard that wonderful term called HFE, to ensure that all states can offer the general level of services required by citizens. It's a black box model, but it's important that we continue to work on that with the Commonwealth because it has its faults. And that's something we're very focused on. But certainly being that reliant on where you have one part of government earning most of the money and another part of government being the state spending a lot of the money, that creates some real challenges. And the Treasurer is very focused around that. We did a federal financial relations review last year. That work is very much alive to where he would want to take those discussions going forward. And you'll see expenses, employee expenses, not surprisingly around 43% of our total cost base. So strong management, you know, in New South Wales we have over 400,000 employees. We're the biggest employer in the state. And I'm talking front line, of course, here now, so I'm bringing in, you know, health profession, police, etc. But it's a big number. And if you get your wages out of control, then you have a big problem. So that's really important. We continue the rigour in that. What does all that mean for our operating position? You can see we've halved the budget deficit this year. So 2021, we've gone from 16 to 8. Forecast 21-22, you'll see that go out slightly. The reason for that is largely some of the COVID recovery spend we had in this year, we've taken forward in the next year, just to make sure we lock in the stimulus required to keep this recovery going. So that's why that has taken that shape. And then you'll see in the latter years of the forwards improvement, and then in the last year, we're at 466 million in surplus. Now that's not a manufactured number, I might add, those of you in the room that are close to these things. Had it not been for a 2.5% wage increase, that would have been significantly larger. So this is a genuine set of numbers, and I'd argue on some of the numbers somewhat conservative. So the operating statement's starting to look a lot healthier. Importantly, from my perspective, when I always look at these things, I look at what I call positive jaws. So what's revenue growth look like to expense growth? And you can see rightly at the moment, in the early years of this budget, we've still got expenses exceeding revenue growth. That's to keep driving the stimulus, what I just showed you in the operating statement. But you can see towards the latter end of the forwards, revenue growth will start to take over from expense growth. And that's getting the operating statement fully back into the state that we want it. To give you some numbers overall, the average over the forwards is 4.3% revenue growth and 2.5% expense growth. So that gets that back in order. Now, what does that mean for balance sheet? The light blue is the budget in November. The dark blue is this budget. This is net debt to GSP. So lower is better, and you can see that improving. We're looking at 13.7% or thereabouts at the end of this period of the budget to GSP. Our target is around 7% at the end of the decade to get net debt back to that sort of number. I mean, I have to say to you, if you study these things globally, 13.7% globally is nothing. UK, for example, is 100%. So, you know, we think in relative terms here, but overall, our budget, our operating statement, our balance sheet are still in very good shape when you look externally. And I might add Victoria's GSP on the same stat is 26%, with 156 billion in debt compared to our 103. So that's a result really of some of the issues they've had in Victoria. Now, importantly, a part of this is the Generations Fund. We seeded this fund with $10 billion a couple of years ago. This is now growing significantly, and thank you to David Deverill and the T Corp team and the work they've done on this. But we're forecasting $95 billion out at the end of June 31. This is really important for the fiscal management of the state, because we get full debt offset with the rating agencies with this. And it's an important tool now. We will continue to seed money into that fund and monitor it closely through the next 7 or 8 years to achieve those outcomes. Give you a bit of a scorecard overall. I won't go through these for the sake of time, but they are improving. That's the important thing. And there's still clearly net debt on the far right I've mentioned, but some of the other important numbers, we talked earlier about CapEx. One of the important objectives of this government is to keep the capital program going. So we have not stepped back through COVID. It's now gone up another $1.5 billion in this budget to be $108.5 billion. And so importantly, delivering the infrastructure that the state wants, but also, of course, creating and maintaining jobs through this period. And I might add from my perspective, AAA rating from Moody's. We're AA plus from S&Ps, but S&Ps were looking to get that back, and we're giving you a pretty good set of reasons to start looking at that going forward. Now, let me just talk briefly about the budget itself and give you a sense of some of the key areas of focus. In keeping New South Wales safe, I've talked about what we've done with some of the health spend, but equally in this budget, there is significant spend further on hospitals, on areas like mental health, and importantly on reform around digital health. And so we tagged $500 million in this budget to continue the journey on e-health. And that's really important because in a crisis, you do see opportunities. And if I look across government, a number of those opportunities have emerged. From my perspective and the Treasurer's, it's very important that we keep driving on those and we don't lose the focus and momentum to keep reform going. So that's a really important part of health reform. More broadly, you can see the numbers in these big clusters of government. These are big businesses, big numbers of people, big businesses to run in the billions of dollars. So you can see across that spectrum. Importantly at the bottom, the customer service cluster we did not have until 2018 when we created that cluster and Minister Dominello was appointed. If you haven't met Victor Dominello, you should. He is incredibly passionate about what he does. He knows a lot more about data than probably most of us in the room. And through COVID, the work that they did to have real-time dashboards in the room was quite compelling. So we were making decisions in real time on real-time data. There's not many governments around the world could actually say that. And Victor Dominello has led that work. So we've got a $500 million increase. We started this digital restart fund 18 months ago. It's now gone to $2.1 billion. Huge investment in digital, which is really leading the way. We're certainly well ahead across Australia. But if you study these things globally like I do, we are well up there globally now with digital development across the state. And You see that every day as a citizen with things like digital driver's licence and renewing online and so on. You're going to see a lot more of that going forward as well. I talked about the recovery and the pipeline. That just gives you a sense of the average spend over these periods. Again, stepping up this year, 108.5, but 21.4 average over the forwards, and the bulk of that, of course, heavy lifting is transport. But not just transport. You can see some pretty big numbers there. The biggest education program we've ever had in CapEx, and equally in hospitals with health. So that continues. If I turn to investment in our people, there's some really good cost of living announcements, over $6 billion in cost of living support across the state. What I really like about this, it is a budget that appeals to everyone in this state. And simple things like the new Learn to Swim program, not only important to save money, but of course to save lives. And this is a really important program the Treasurer wanted to put into place for children aged 3 to 6 years. Strong preschool, we did this last year to support preschool programs. There's a great amount of evidence to say this is a terrific thing to do at that age. We're reinforcing that and putting more money into that. We're also doing seniors travel cards, and as you can see there, very significant money in energy rebates. In terms of Indigenous spend, a number of really good programs. The one I might just signal out is the Roads to Home program, which is the top right, 34.1 million. That has been an outstanding program. And many of our Indigenous colleagues today have to walk some distance on unmade roads to do simple things like mail pickup. Emergency services coming into these communities is incredibly difficult. So this is a program that we're investing further in, into another 10 Aboriginal communities over the period of the budget. In terms of broader social support, the Together Home program, we effectively housed 400 rough sleepers during COVID last year and got them into homes. We're extending that program with another $57 million to keep that program going, and the importance of that. And then, of course, in regional New South Wales, very concerned about regional New South Wales around April, May last year. And of course, many of you in this room have probably done what I'm sure you would have done, and that is you've tried to get a bed in regional New South Wales in the latter half of the year. Found it very difficult. So regions are back, and we're continuing to reinforce that around a number of funds here. The Regional Job Creation Fund, also the Royalties for Rejuvenation Fund, the 300 million, is about really positioning coal mining communities for a new economy as they go through the energy transition. So starting to think ahead around some of these challenges that will come at us. And then finally around this aspect of the budget, wages, we've announced 2.5%. The government is very keen to reward the sector for their contribution. 2.5% was our policy pre-COVID. We then gave the sector 30 basis point increase on the back of the IRC last year. We're now going back to a 2.5% policy. If you look at Victoria, who are 2%, at the very time when CPI will be moving up, Victoria's going back to 1.5%. So they're actually going in the opposite direction. That would be due as a result of the pressure on their budget. Now, finally, let me just make a few remarks about transforming the state. We've produced our Intergenerational Report, which is a every 5-year report. If you haven't seen it, I'd encourage you to have a look at it. It's written in a very retail way, so it's not some deep Treasury document that's going to put you to sleep, hopefully, but it has many interesting facts in it, and really important direction for government to think about decision making over the next 40 years. So it covers the 2021-2061 period. And you can see here population growth, 3.3 million, going from 8.2 to 11.5 over this period. Not surprisingly, an ageing population. The age dependency ratio going up significantly, life expectancy and so on. So some really important trends that agencies of government can use this data to frame up their own policy and direction now as they look forward. The important aspect from my perspective is the fiscal gap, what we call the fiscal gap. Now, the fiscal gap is the projected change between revenue and expenditures and it's expressed as a percentage of GSP. That's at 2.6%. That's roughly the whole education budget, so $20 billion, if you want to put a number around that. If we did nothing about that in government over the next 40 years, to give you a sense of what that means, net debt will be 100% of GSP in 40 years' time. So that means we're leaving a huge amount of debt for future generations to repay. So this is really a signpost and a guide for governments to look at what they need to do re-policy to ensure we don't end up in those sorts of positions. So a very important document. Now, if you think about the three key drivers of economics, productivity, population, participation, given where we are with population, productivity is even more important. And if you just concentrate on those purple dots on this slide, this is a real gross state income per capita. And you can see the large bar on the left of this chart was the mid-90s productivity reforms led by the Commonwealth. Hugely important, but you can see since then, it's been a pretty dismal story. And productivity arguably now is more important than anything that we focus on. So that's what we're doing, and Peter Ackerstrat, who's with us this morning as the Productivity Commissioner, Peter has just released his report. It covers these 7 areas, 60 recommendations for government, and the Treasurer has accepted this report. It will now be the job of the government to look at what they do. They may not do all of these, but the Treasurer is committed to every 6 months reporting to Parliament on what they've done with this report. So getting a real focus on productivity. And just to give you a sense of some of the key things that are covered, top left, the COVID regulation piece. To give you an example, last year, we relaxed restrictions on 24-hour delivery to supermarkets. Why wouldn't we lock that in? The world hasn't collapsed. These are good things to do. And so there's a whole raft of regulations that I think we can progress. The third one down on that same level, automatic mutual recognition. I don't know if you know, but a Sparky's not a Sparky in different states. So you can be an electrician in Victoria and can't practice in New South Wales. I don't know about you, but I find that amazing in 2021 that that's the case. So we've been pushing this federally. We're close now to getting this through. And this is the very time when you'd want cross-border skills moving around where the work is. So these are important reforms that aren't immediately visible, but things that we'll be picking up over the course of the next little while. So just to finally close on electronic vehicles, you would have seen the budget announcement, but this is a key reform. We're getting the right balance between incenting take-up of EVs, but also making sure that we replace fuel excise, and getting that right balance is important. So we're giving incentives up front for stamp duty removal below a certain price. In this case, it's 78,000. And then ensuring that we put a road user charge in place around 27, or the earlier of that, or a 30% take-up is important, so we get that balance right. It's also investing in infrastructure, making sure that we've got road charging capability available on a much more regular basis, roads and so on. So it's a really important policy. It's been put together with the Treasurer and some of his colleagues, and one that I think is putting us in a leading position in this state going forward. So in closing, just to give you a sense of some of the key metrics that we're looking at, if I look at the economic recovery and the stimulus, we were looking at 5.25 by the June quarter. We're now at 4.75, so we're ahead on that measure. GSP back to pre-COVID level. We're 1 year earlier, so we're above trend and what we targeted. Back to surplus 24-25, that's in the forecast as you've seen, so on target, and net debt reducing over the medium term out to 2030. So some of the core drivers are looking good. There's still a lot more work to do. The job's certainly not done. We have days like today, and we still need to address these things. But importantly, I can give you a lot of confidence today that the state is open for business. And as the Treasurer said yesterday, dress for success. So I'll leave it there and maybe happy to take questions and comments. Thank you.
Thanks so much, Mike, for that overview. And I think from my point of view, I would really like to congratulate you and the government on the budget. I think it's very much an overused cliche, but these are unprecedented times. And I think all of us here in New South Wales do appreciate our government is doing a great job of navigating through these challenges. The management of the health crisis is one aspect of that, but obviously there's the economic side of it as well, which is obviously equally, if not more challenging. But I do think we see some great signs from your budget overview there that we're through the worst of it and well placed again to see the state's economy moving in the right direction. I do have quite a few questions here ready, so I'll do my best. We do only have just a few minutes if we are to stick to time. But maybe I'll just open up with one. It's obviously a big spending budget, spending our way out of a crisis, some would say. I guess the question is, have we got that balance right between spending and investing in the state's future?
Yes, look, I think we have. I mean, it's something I watch closely. Obviously, with interest rates where they are at the moment, this is an opportunity to spend into this budget. I mean, I make the point regularly in Treasury, we're not going to save our way out of this dilemma. So the crisis we've got, Treasury takes what would normally be a perspective it would around saving money, saving expenditure. That's not going to get us there. So now is the time. Interest rates where they are, interest expense to revenue is still very low. And we've got to spend, I think, and the Treasurer has put this in the budget into next year, as I've indicated, to really lock in the recovery. So I'm feeling pretty comfortable about that. The challenge will be the year after when we pull back a lot of the COVID spend, and we'll need to make sure that spend comes out of clusters, but also that we've locked in the recovery. So that's 12 to 18 months away.
Yep. And you mentioned the COVID recovery there. I guess that feeds into a couple of questions I've got here around border closure and the implications of that. I guess there's a view that the strong economic recovery, particularly employment, is seen as a bit of an outcome of those closed borders. And equally, I guess the impact or lack of impact of population growth during this time as well. So I guess the question is, how do you see that impacting as we move through the border closure issue and what implications might have that for the future economic policy?
Look, the implications on population growth economically are very significant, as many of you would appreciate, and I've talked about some of the numbers in this budget. Border closures is the most important thing to address. Opening up immigration, again, equally, not only re-spend, but skills and getting that back is very important. So these are things that I think will be the subject of a lot of political debate over the next little while. Is the management of borders. I mean, our settings in the budget are based on the Commonwealth settings because they have control of borders, obviously, so we've taken alignment to them, so that really relates to mid-next year before borders potentially reopening. If that's earlier, then obviously there's some economic upside. But the most important thing that we can do related to all this, David, is the vaccine.
Yeah.
You know, from where I sit, if we get the vaccine rolled out quickly by the end of the year, that's the biggest economic upside where I sit in terms of anything else we can do.
Yeah. And I guess related to that is the importance of returning international student numbers. And I assume that vaccines is going to be the key there too.
Yeah, look, on international students, I mean, I mentioned that vacancy with barista roles earlier. I mean, that's the sort of jobs many of them do. It's worth $13.6 billion, the international student sector in New South Wales. Hugely important. And you look at their spend, it's usually double what they pay in education fees. So they bring their family and whoever out, you know, and they spend a lot of money. We need them back. We've been working with the Commonwealth on a plan. I'm pleased to say that's close to approval. And we'll look to start bringing back, albeit in reasonably small numbers, 250 a week. But from around mid to late July, we should be starting to bring back international students. Yep. And they'll be housed in special accommodation. They'll be subject to the same police and health control that other citizens would have coming back. So this is a really good step forward for the state and obviously for the university sector.
I did the Vinnie CEO sleep out and the Treasurer did too last week. So I did pick up on the continuation of the Together Home program, which is obviously very important. I wonder what correlation that might have had to his uncomfortable night in the cold last week. But there is a view that that social housing and social equity is a little bit of a gap in this year's budget. I think allowing everybody access across the community to the recovery is vital to a sustainable economy. How do we address these gaps going forward?
Yes, look, social housing is critical. I think we'd all agree on that. We put 880 million into social housing in November budget. We've put more in this budget, but I suspect that will continue, David. It's a key area, I think we need to keep addressing. The feedback I get, and from my lens on this, is there's more work to do on social housing.
Yeah.
So I'd expect that'll be a focus. Treasurer is very well aware of that.
And there might be a segue from that into this question, and I promise you it's not one of mine, but in the $108.5 billion on infrastructure investment, where do you see the opportunity for private sector investment there?
Oh, look, it continues. I mean, we have a balance sheet that we've been managing carefully relative to our own debt, private sector involvement, Generations Fund I talked about earlier. We'll be constantly talking to the private sector about opportunities. We're doing that now, and we'll continue that dialogue. I'm all for sharing risk and making sure that we meet the due dates on a number of these key projects that we must deliver. So they're dialogues we're having, David, and I'll continue to do that.
And just running up against time here, I'll just conclude with the last question around the sale of WestConnex, expected to raise $12 or $13 billion. Are these funds likely to be used to lower the borrowing program, or is this money headed for the NGF program?
Look, I'll leave that for the government in due course, but I think it's likely you'll see that flow into the NGF because we do get full debt offset from that program. So the government's getting full benefit for it, but that transaction's live. So I won't speculate on returns, David. I quite like those numbers, by the way, but I won't speculate.
Oh, we have run up against time, so we in order to stick to time, we do need to wrap up the Q&A there. So thank you, Treasury Secretary, taking the time to be with us here today on short notice and for all of your insight.